Hey guys, in this video, we're going to talk about the 441 spread trading strategy. Now, this strategy is made known by a man named Uncle Tony. You can find him on his YouTube channel at Uncle Tony. And also, he is featured a couple times in different Tasty Trade segments. So his name is Tony. You can find him at Uncle Tony. If you want to dive in deeper to his mechanics and how he plays this strategy, visit him on his YouTube channel, and he can dive into it way more than I can. I'm just going to give you just kind of the brief overview of how this trade makes money. So basically, this is not made for a high implied volatility environment. This is basically a sort of a low to kind of medium IV environment that we want to play this, and we're looking for an expansion to the downside. So whenever we see a nice sharp pullback in a stock, obviously you're going to get IV expansion, and you're definitely going to get it to the downside with that directional move. So our assumption in here directionally is to the downside, because that's how we're going to make most of our money, obviously. But we're going to put this strategy gives us no risk to the upside. Okay. So even if the stock goes against us a little bit, or we're completely wrong and just keeps on shooting up, we'll still make money on this strategy. But this is built in for a medium to low IV environment, and it's going to be a further dated expiration cycle is where we're going to be playing this in. So we're going to open this up in the September cycle right here. This is going to be what we're looking at. So basically what we start off with is we start off with 4 put or long put spreads, right? So we know about bull put spreads, which are basically just credit spreads. These are going to be put debit spreads, all right? So you can see that basically to put on a debit spread, you buy a call and then you sell a further out of the money call, or I'm sorry, you buy a put and then you sell a further out of the money put. I'm sorry. And that's how you create a debit spread on the put side. So that's what we've done here. We sold the 415. That's our 30 delta. We're buying this 35 delta here at the 420s. And you put on 4 of them. And what you're looking for is you want to try to find a spread, right? A $5 wide spread that only cost $1 to place on. So we can see how much these cost. It's going to be $1. So obviously there's going to be 4 of them. So it's going to cost us 428 bucks, but it's only $1 for the spread. Okay. So that's good. So that's the main key in all of this, is finding $5 wide spreads that only cost us $1. Now what you do is that you have these spreads on. You can see that our assumption is directionally to the downside. Our break evens are up here right around this 419 area, but obviously we want the SPY to shoot down way below 415 by this expiration date. And that's we're expecting right around a $20 expected move. We're trading at 430 right now, so we're kind of right there. But what we want to do is create a no risk to the upside situation. So what we do is actually we go in and then we sell a put against the spread. So it's sort of like a risk reversal almost, but instead we're all on the put side, and we're actually just going to sell this put here. We'll go ahead and we'll sell, let's try if we sell the 400 here. Let's see what that gives us. So you only sell 1. That's the key. So we're not selling 4 here. We're just going to sell 1. That's how we get the 441. So we're buying 4 of the 420s. We are selling 4 of the 15s, and then we are selling 1 of the 400s. And what does this do when we do this? Well, it gives us a small credit of 53 cents. And you can see our max profit is $2,053. Obviously, our max loss is going to be getting a sign down here at the 400s. But our buying power, it's gonna cost us quite a bit. It is gonna be around $6,000 for us to play this. But there's no risk to the upside whatsoever, and we will only realize losses when the spiders go all the way down below 400. And I'm sorry, all the way down. Excuse me. Way below 400, and you can see our break even is going to be way down here at this 380 mark. So obviously, you still have risk of being assigned at the 400s here, but your break evens are going to be all the way down here at the 380s. So this is a no risk to the upside. You can see, oh, I'm sorry, as I'm scrolling up here, you can see that that green bar just stays green. No matter how high we go up, there is no risk to the upside in there. We will be making money all the way. It doesn't matter how high it goes. You can see it better on this view here. You can see everything stays green. So no matter how high we go up here, we will make all our money if the stock stays in between, let's see, 414 and $400. That's where we're going to make the most of our money. But then below the 400, we still will make some because our break evens are going to be way down here at the 380s, but we still will be in the green. Obviously, once we get below that short put, be aware that you do have a chance of getting assigned on those. But your break evens are down here to the 380s. But what we created is basically a no risk to the upside trade. It doesn't cost a whole lot to put on, and we can still participate in a move, in an up move, and still make money. And obviously, if we get a little bit of a pullback, we will make money. If we get a nice pullback, we'll make money. Even if we get a large pullback, we'll still be here in the green. So all in all, not a bad strategy. And if you want to dive deeper into the mechanics of this, visit Uncle Tony, and that's going to be on YouTube, Uncle Tony. So if you guys have any questions about this, feel free to let me know. More or less, you're just buying out of the money puts, you are selling an further out of the money put, and then you're selling and even further money that out of the put. And the put spread that you're creating on the first two, you're going to do 4 of those, and you're only going to sell 1 of that last out of the money, 441. That's the basics of it, guys. All right, so thanks for watching. Make sure to check us out on social media. We have attached links to our socials in the description, and we also have a trading service if you're interested. There's more information in the description below.